Hello students, today I would like to welcome you all to this video. In this video, I'm going to solve a ledger account practice question. As in the previous ledger, we have learned how to make ledger accounts. So today, I'm going to solve some double entries into the ledger accounts. So the double entries that I have used to solve this question is Mahindra's journal entries that we have made in our previous double entry practice question. So let's start. The first entry that we have is bank debit and cash debit, capital credit. So the first account that we need to make is bank account. So I'm going to write here the title, bank account. In the first column that we have is date, details, and the amount. That's the debit side, and on the credit side we'll have again date, details, and the amount column. So as we can see in the transaction, the bank account is going to be debited, so we are going to write this entry on the debit side. So the date was 1st of November 2007 and the amount was 158,500. The reason was the capital account, the account that comes on the credit side. So that's the first entry that we have done in the bank account. So the next we need a cash account to record the second entry here. So I'm going to make a cash account here. So I would like to tell you guys that this format that we have seen, the format of columns including the date, details, will be given in the question by the Cambridge. So you don't need to make this in the final exams. So the cash is also debiting in this entry, so we are going to come again on the debit side of this account, 1st of November 2007. Here again we'll write down the capital account because it's also going to increase because of the capital. Now the amount here is 1,500, the amount that is written in front of the cash. So the next account that we need to make to complete this double entry is capital account. So here's I'm going to make a capital account in the next account. So let's make this. So capital account, so it's going to be credited, so I'm going to write down date, details, amount on the debit side, and then on the credit side date, details, and the amount column. So here I'm going to record this on the credit side, which means on this side the 1st of November 2007, again the 1st of November, because there are two debits, so I'm going to record both of them. The first one is bank account, and that was with the amount of 158,500, and second one was because of cash account, and that was 1,500. So we have to record separately of each debit account that we have. So that was the first entry that we have recorded in the T accounts. So now the next entry is the premises account is debited and the bank account is credited. So what do we need? We need a premises account. So let me make a premises account here. So we have premises account. Again, I need to write down date, details, and the amount. Here again, date, details, and the amount column. So now I'm going to record this on the debit side because premises is going to be debited on 5th of November 2007. So the amount was 2600, and now this is the amount was 95,000. So the premises 95,000. I'm going to write down here. So this was because of the bank account, so I'm going to write down the bank account. So now we need to record this into the bank account because bank is also going to be credited. So here's the bank account. So I'm going to record here on 5th of November 2007. The bank account is going to be credited because of the premises, and the amount was 95,000. Here's the second entry that we are done with. Now the next entry is the purchases account and DULIP account. So I'm going to make two new accounts. The first one is the purchases account. So let's make the account here. So we have purchases account, let me write down date, details, and amount. Again the credit side, and another account that I need is the DULIP account. So I'm going to write down here the DULIP account. So that's the columns of that account. So here's the both debit and credit. So now the purchases account is going to be debited again on 5th of November. So I'm going to write down here 5th November 2007. It is debiting because of DULIP account. So I'm going to write down here DULIP account, and the amount is 2,600. Now the DULIP account is going to be credited. So I will write down here on the credit side 5th of November 2007, and this is because of purchases, and the amount is 2,600. So now the next account that we need to make is DULIP account is going to be debited and purchase return is going to be credited. So we already have a DULIP account, so now we need to make a purchase return account. So let's make this purchase return account, and I'm going to write down the date, details, and the amount again here for this account. Now the DULIP account is going to be debited, so I will come up here on the debit side. We'll write down the date here, the 10th of November 2007. So it is because of the purchases returns account. So the amount is $150. So now the purchase return account is going to be credited, so I will record this on the credit side. So the purchase return on the credit side, so we'll write down here the 10th of November 2007, and this is because of DULIP account. So the amount here again is $150. So we're done with this transaction. The next entry that we have is general expenses to cash. So we need to make a general expense account because we did not have a general expense account before. So here we have general expense account. Again the date, details, and the amount on the credit and debit side. Alright, now the general account is going to be debited on 14th of November, so we'll write down date here, 14th of November 2007, and this is because of the cash account, so we'll write down the cash account here, and the amount will be 275. Now we need to make cash account, as we already have a cash account here, so I will go back to the previous page where I made cash account. So in the cash account we'll record this on the credit side. The date was 14th of November 2007, and this was because of general expense, and the amount was 275. So we are done with this transaction. Now move on to the next transaction. We have rates account debited, 395, and cash account credited. So the cash account is going to be rates account. We need to make a rates account, so let's move here on this page to make a rates account. So let's make the title rates account, and here we'll have date, details, and amount. Date, details, and amount column again. So we'll record this on the debit side, 19th of November, so we'll write down here 19th of November 2007, and this is also because of cash, so we'll write down cash account here, and this is the amount is 395. Now we need to again record this on the cash account as well, so I'll come back to the cash account here. So that's on 19th of November, because the cash is going to be credited, so I will record on the credit side, and this is because of the rates this time. So rates account, and the amount is 395. So we are done with this transaction here. Now the next transaction that we have is Anila's account and the sales account. We did not make any Anila and sales account yet, so let's move on to the next page where we can make Anila account and sales account. So here we are going to make first the Anila account. So I'll write down date, details, and the amount of debit side, and then date, details, and amount of the credit side. So now the Anila's account is going to be debited, so I'll write down 21st of November 2007, and this is because of the sales account, and the amount was 124. Now again the Anila's account, and then it's going to be debited because of the sales, so we need to make the sales account here. So we'll write down date, details, and the amount of debit and credit side again. So all the TA accounts formats are same. So now this time we will record this on the credit side, because the sales is going to be credited because of Anila's account. So write down the amount of 124 here. Now the next entry we have carriage outwards to cash, so we'll make a carriage outward account. So let me make a carriage outward account here, because we did not had a carriage outwards account before. So write down the date, details, the amount of both sides. Alright, so now the carriage outwards account is going to be debited on 21st of November. So we'll write down the date, 1st of November 2007, and this is again going to be debited because of the cash account. So we'll write down the cash account here, and the amount was $95. Now this entry we need to record in the cash account as well, so I'll move back to the cash account. Here it is. So record this on the credit side is on 21st of November because of carriage outwards, and the amount was 95. Now the next entry we have DLIP account debit and bank account credit. So we already have a DLIP account here, so we'll come to the DLIP account. So now the DLIP account is going to be debited, so we'll select the debit side and we'll write down the date, that is on 24th of November, and it is because of the bank account this time. So the amount that we have is 1,000. Now the bank account is going to be credited, so I'll come back to the bank account. So I'll select the credit side, it's on 24th of November, and now this time is because of DLIP account. So write down the amount 1,000 here as well. Now the next transaction that we have is drawings account debited and purchases account credited. This is the entry where the owner took goods for his personal use. So in this scenario we are going to make the drawings account debit and the purchases account credit. So we have date, details and amount column. So now the drawings account is going to be debited, so we'll write down the date 28th of November 2007, and this is because of the purchases, because purchase account is going to be credited and the amount was 250. So now we need to record this into the purchases account as well. So the purchases account that we have is here, right, it's here. So purchases account is going to be credited, so we'll record on the credit side 28th of November. So this is because of the drawings. That's the only entry that we have here where the purchases account is going to be credited. Now the last entry that we have is bank account debit and rent income account credit. So we need to come to the bank account first, and we'll make this on the debit side, and that is on 30th of November, and it is because of the rent income account. So now the amount is 260. So we need to make a rent income account, as we did not have this account before. So here we'll come and we'll have a rent income account. Now the date, details and the amount on both sides, and the rent income account is going to be credited on 30th of November 2007, and this is because of the bank account, and the amount is 260. So this is how we made all the T accounts. Now it's time to balance the T account. So coming back to the bank account here, as I have told you guys before in the previous video, that the process of balancing a T account is we need to look into the both sides. The side that has a bigger value, so we'll make a total of that side first, and then we will transfer it to the other side. We will deduct this balance from that total to get the closing balance. So let's do this. So here we'll have 0,67158. This is the bigger value, 158,760. So we have to deduct this 96,000 from this balance. So here 158,760, So we are going to deduct the 96,000 from this value, and we will end up with 62,760. So we'll write down this here, and we'll mention this with balance carried down, and we will have this balance here as well as balance brought down, means the opening balance. So the date that will come up here, 1st of December, so the date here will come up 30th of November, the last date of this November month and the first date of the next month. So moving on to the next account, so we are going to find here that this side has a bigger value, so we'll write down again the debit side. Cash account always has a debit side bigger value because it can never have a credit opening balance. So we'll deduct this 1500 with 275, then 395, and then 95. So we'll end up with a total of 3735. So we'll write down here 735. This will be my balance CD carried down, and then the balance brought down 735. Again the dates here, the last day of the month and the first day of the next month. Moving on to the next T account, where we have a capital account. In this account, so we can see we have all the transactions written on the credit side. So we'll make the total of this side because the credit side has bigger value. So the amount will come up here 160,000. We will move this to the other side as there is nothing to take away from this balance, nothing to deduct, so we'll write down the same amount here, and this will be our balance carried down, and then it will be our balance brought down. Again the 30th of November and 1st of December. Dates are very important in our CIS exams. The examiner, they will award 1 mark for if we have all the dates are correct. So if our dates are not correct, so they will deduct 1 mark in the CIS final exam. So here we have 95,000, there is nothing to deduct, so that will be our balance carried down, and then it will be our balance brought down 95,000. So 30th of November will be here and 1st of December will be here. So let's move on to the next account that we have is the purchases account. So the purchases account has a debit side bigger value, so we'll write down this amount here 2,600, and we'll deduct this 250 from this balance. Let me just take this calculator. So we'll have 2,600 less 250, it will give me 2,350. So that will be my balance carried down, and then balance brought down 30th of November, 1st of December. Now the next account is tulip account. So as we can see that the credit balance has the bigger value, so we'll write down the credit side total, that's 2,600. We'll deduct this 2,600 less 1150, so we'll end up with 1450. So we'll write down 1450 here as balance carried down, and this will become my balance brought down here 1450, again 1st of December and 30th of November. The purchase return account, same as we are done with the capital account. So we have the credit side bigger value, we'll transfer this, there is nothing to deduct, so this will become our balance CD and balance BD here, 1st of December and 30th of November. So as you guys can see that we have the same process for all of these T accounts, so you don't need to change any methodology or anything while you are balancing a T account. It doesn't matter that you are balancing a T account here in the ledger question, or you are balancing any other T account like the control account, the depreciation account, or any other T account. So the same process will go with every single account. Like we have to identify the bigger side, and then we have to write down the total of the bigger side, and we'll deduct the total of the smaller side from the bigger side to get the closing balance. Here again in the rates account we have nothing to deduct, so we'll write down the balance CD and balance BD. That will be 30th of November and this will be our 1st of December. So here we have Anila account. So in this account we have a debit balance, so we'll write down here 124. There will be nothing to deduct, so the balance CD and balance BD will be here, 30th of November and 1st of December. Sales account always has a credit balance, so here again 124, that will be the balance carried down on 30th of November, and then it will be your balance brought down 30th of 1st of December. Now the next balance is carried outwards. It's an expense account, so expenses always comes on debit side, so it has a debit balance of 95, so we'll write down 95 and then nothing to deduct, so this will be our balance CD and balance BD 95, 30th of November and 1st of December again. Now the last two accounts, the first one is drawings. Drawings always has a debit balance because it is a reduction in our capital, so 250 again, and balance carried down and balance brought down 30th of November and 1st of December. The last account is our income account, and income always comes on credit side, so we have a credit balance of 260, so I'll move this to the other side. There is nothing to deduct, so we'll have this balance CD and balance BD here. That will be the 1st of December and this will be the 30th of November. So all of these accounts are balanced, so which means that we had a closing balance of in the bank account is 62,760 and balance BD 62,760. That means this is our asset. We have this much amount of money in our bank account. So every assets and expenses, they have their balance brought down on the debit side, and every liability, income, and capital, they have their balance brought down on the credit side. So that was the question that we have done today. So thank you very much.